you're talking about an economy that could be much better, markets much higher over the next year. So if you take away one thing from me today as an investor.
Welcome back, it's Elliot from the Early Stage Investor. I am so excited to make this video because in last week's video, we talked about the timing for the bull market for assets like ICP and Chainlink. According to Raoul Pal and his liquidity guru, liquidity is supposed to peak sometime around mid-2026. Here's the chart they looked at. So in 2021, liquidity peaked. Obviously, that meant a massive bull market in crypto. They're expecting the same thing to happen in 2026. So in this video, we're going to look at information that confirms what they said. And it's based on cold, hard data, economic data. So if you're new to this channel, this chart shows the ISM. This is essentially the US economy flat. It's been crashing ever since 2021. The chart shows Chainlink. It's been suppressed. Good fundamentals, still suppressed. Can't crack its all-time high. And then this chart shows ICP, and this chart shows assets like PancakeSwap. So altcoins are all in the same boat. This chart shows how altcoins in pink are almost perfectly correlated to the ISM. If you want to understand what's going to happen to altcoins in the future, you have to think about what's going to happen to the ISM in the future. What moves the ISM? We covered it last video. Interest rates move the ISM. Here's the chart of the 10-year bond yield. If you flip it upside down, it looks exactly like the ISM. So Jerome Powell came out and cut interest rates by 25 basis points in September. What do we have to look forward to in October? We have 93.2% chance of an October rate cut. So now, right, we've been covering how assets like ICP and Chainlink are almost perfectly correlated to interest rates in the ISM. Well, interest rates are starting to come down. What does it mean for these assets moving forward? When does the bull market start? Well, let's hear from Darius Dale. I've actually interviewed him on this channel before. He uses cold, hard data. His model probably has like 100 plus data points. He measures the rate of change of inflation, of growth. He puts it into a model and a very accurate prediction about where we're headed. And when you know that conditions are going to be right, you know we got a crypto alt season. So here is Darius Dale.
So we've been coaching our global investor community to expect that the Fed has a new phantom 3% inflation target. Paradigm C is the administration's goal and stated intent to outgrow the debt and deficit trajectory. Okay. And so what that ultimately means is that they're going to be pulling all sorts of levers, monetary levers, financial levers, deregulation levers in order to engineer an economic boom.
What he's saying that the US government is about to do is stop worrying about sticky inflation. So move their inflation target from 2% to 3%. Try to outgrow inflation. So if the economy can grow quicker than 3%, then the fundamentals of the economy grow faster than the money supply, and they think they can outgrow their deficits. That means they're going to keep interest rates low. They're going to stimulate the economy. They're going to buy back whatever the debt they can, print money, stimulate growth, and hope it can outrun inflation. It really does not get more bullish than that. So here's Darius Dale continuing.
It's our view that the economy is likely to boom starting next year, and it could last for several years.
So right now we're looking at an economy where people are not optimistic, and they're not optimistic that it's going to get better. How do you see it?
So our models are showing us that this is an economy that's a coiled spring. It's unlikely that we go into recession. We are what we've been calling a U-shaped economy, and we're in the worst part of that U, the bottom left side of that U. So over the next 1 to 2 quarters, we're probably going to be in this rough patch, and the polling reflects that. However, if you look ahead, according to our models, it's highly likely that growth accelerates materially next year. You're talking about accelerating monetary easing, accelerating fiscal easing. You're talking about a dollar that could be down much lower, inflating global liquidity. We're talking about a market that could bubble.
And that is what Treasury Secretary Scott Bessent has been saying over and over. And the administration, you're going to get growth. Look at Q4, just wait.
Look at Q4, just wait. We're about to get a booming economy. And the reason this is a big deal is because I trust this guy's models. He was one of the whiz kids at Hedgeye, which is big as well. They try to figure out where growth and inflation are going. And when you can figure that out, you can figure out what to invest in. Well, what they are talking about is an environment ideal for crypto and altcoins. How do you get that ISM bumping? You lower interest rates, you stimulate, just like you did during the pandemic. You stop worrying about sticky inflation. So Jerome Powell's supposed to be leaving in May. They're going to replace him with someone else. They have it all set up. Midterm elections are next year. They want a booming economy. That's exactly what he's saying is coming. Massive for altcoins. So the ISM is supposed to be moving up.
I've known Scott for many years, a former client, and obviously I wish him well in his new job at the Treasury Secretary. He and I think very similarly in terms of the dynamics that you need to, the levers that you need to pull in order to engineer these outcomes, and it's our view that they're pulling them. Whenever you get debt this high, the government only has three choices. You can cut, you can grow, you can print. And their choice, this sort of quote-unquote hostile takeover of the Fed is the administration's decision to use the monetary lever to assist with their growing their way out of the debt problem. And so ultimately, what you're talking about is a situation where they're pulling levers, and ultimately you're talking about an economy that could be much better, markets much higher over the next year. So if you take away one thing from me today as an investor, expect structural regime change at the Federal Reserve, and you need to position for that.
So he's saying position accordingly. He rarely gets this bullish, but that is what the data is telling us. That's what the government is telling us. Scott Besson was his former client. They're saying, look at Q4. They're saying they're about to stimulate like crazy. And so how do you position accordingly in this? You buy the highest quality, early stage, undiscovered assets on the planet. And we've been covering the fundamentals of a lot of those assets on this channel. Again, their chart looks like the ISM. So if the government can stimulate the ISM up in any way possible, which trust me happens every single time when they print a lot of money, then altcoins are going to absolutely rip. So all you have to do is survive the next 6 or so months. It might be brutal. There might be some volatility. Powell could say something hawkish. Trump could say something. Something could break in the financial system in the meantime. But all you have to do is get through it. Survive into 2026. That's what everything is lining up for. And a lot of people are still very bearish on the economy. So that's what we're looking like. Massive bull run, Q4 2025 into 2026. Get ready, enjoy it. And by the way, you know, I've been coming up with a scheme to create a vehicle to buy up ICP tokens and potentially chainlink tokens as well. There is a way to do it. And I'm going to share more about that with you guys on this channel, the exact roadmap. But for now, if you're a Patreon subscriber as of 11/1/2025, you are going to earn 100,000. We're all going to make it WAGMI tokens. Currently, as of the recording of this video, it's worth something like $12. That's 12 free dollars earned in this crypto asset, which does have very interesting fundamentals. We're increasing total value locked on Solana. The plan is to use it. We'll talk more in a separate video, but that's where we are right now, looking forward to the next few months.